Let's start it off with Apple. What I can say is still in the uptrend. It's continuing upwards. However, the 175 resistance is since from last August of 2022. So we would need a clean break from there and make sure that we don't see a drop down. That's number one. The second problem I see in this chart is 181 is an all-time high for Apple. That from 175 is what, 3% upside potential versus a downside. You could go as low as what, 155. Is that the last one on the Fibonacci, or even if I say in the zone of 149? So you're looking at a decent downside if it happens. What could be the trigger to break that 175 to going to 181 is the next developer conference happening. I guess it was June 5, launch of new products. Most folks are looking forward to the AR VR headset, so we'll see how that plays out. The MACD is flattening at this point in time. You can see it's pretty flattened out here, and the put to call ratio is slightly bearish. It's 1.01, so you could see there's a little bit of a hesitation coming in. If we have to trade options, I generally look at about 30 delta. So for May 26 expiration, we're looking at 170 on the put side, 9,800, and on the call side is 180 at 23. So a little bit more bullish on the next 5 days. What does it look to you guys here?
Yeah, I think this one I've been staying away from for quite some time, to be honest. I don't know why. It's just one of those things that just doesn't tick my boxes. But really, I should have actually got on board with this for a nice swing trade. But yeah, I think the 181 will be one massive test. And I think we'll see one of two things. If it does kind of come alongside the event, which it looks like it kind of is, if it does follow this trend upwards, we could see a blast straight through it and new all-time highs. Or, if it's very, very disappointing and, release some possible numbers alongside the new products, then we could likewise, like you said, come back down to that kind of orange line, which is the 200 moving average, which would be quite dramatic, but we've seen it before. But yeah, I would be very excited if it does break that 181, because it could go a little bit more mad, really.
We had the high of, 176, I think it was 176.15 back in August. And yep, here we are, right? And it looked like it just rejected right out after trying to get above that. It got above that, actually. So we got above that last week and just rejected. We were right there. I don't know if this is one of those spots where I think I sit tight and wait and see what happens.
Exactly. Generally, if you own stocks and you want to sell covered calls, this is the time that you sell covered calls when the stock is running up. Because when you are reaching that all-time resistance, that's where the premiums are very juicy, number one. And then once you get that rejection, the way you can trade an options contract is let's say if it has a hard drop of, let's say 10%, it drops. So the options premium will quickly get crushed. And that's where you make that trade. Even though, let's say you sold 3 months out, you got 20, 25, 30%, you made it. It's really your call at that. Do you want to wait for the expiration and take full 100%? Or you can, quickly close that out and take that 30 to 50%. Answer is different for everybody. In my case, what I do, if there are stocks that are my long-term portfolio stocks, like Apple, like Tesla, Amazon, I generally don't wait for the expiration date. Either I roll those options or I close once I'm in the 50, 60% profit. So that's how I generally trade, because those are my long-term stocks and I don't want to lose them considering the cost basis. That may answer Ty's question as well. Also touch upon Dr. Wan's question, how to not be greedy. I always think if you're trading or investing, try to get 1 runs and not hit a home run every single time.
Yeah, I think that's wise advice. Good stuff, Kaye.